We're going to take a look at this form. This is the cost of structure form. And this form allows you to go through the financials and complete it without going back and forth. The financials are very important. You guys are working on your business model. So right here, you will put your business name, team member, and date and period. Now, you look at your business model format. If you want to do add base, maybe you want to click on that. You highlight, pop a color in that, hit save, and now I know that your business is an ad base and subscription base. All right, either one. So this area, you select what your business model is going to be, then you move to part 2, operating fixed expense. Now, operating fixed expense deals with things that do not change. Okay, from period to period, it's still the same, like a mortgage, rent, utility bills, and a loan. So with this form, it makes your life easy. Makes your life easy. So let's look at this. Let's say you have to pay rent. So you would type in the word rent. Okay, and let's say the rent is $50. Notice I put 0. Notice that the number changed. But if I put, see, it changed to 30. But if I put how much? We said $50. Now, the reason I put 50 because a lot of you are gonna be at home. Best be realistic. You're gonna say, you know, I'm making money, Mom, so I'm gonna pay you $50 to help out. I know you're gonna look out for me, Mom. All right. So this is operating fixed expense. You might have hosting if you're doing a website. You might pay $30 for the hosting. Utilities, phone bill is a fixed expense. So you just go through, fill it out, and what it does, it calculates the amount here on the bottom. Now let's move to variable expense. Variable expense changes. It changes. Okay, for example, if you got to ship something to Canada, the cost is going to be more. Maybe you have to put more items in a box. The weight changes. So if I'm going to deal with shipping, I'm going to ship this today in the United States, priority, you're looking at $2.25. So I'll put $2. And the form, you'll be able to download this form. So you just put $7.25 for the shipping. And this person calls and they want it express. Okay, well, I got to factor in express shipping too. That's the issue because most of my clients want their product right away. So I would do the same. Notice that it calculates it on the bottom. Okay. Then we move to section 3, startup expenses. Startup expenses is very important because in the beginning, you want to put everything that you need to start your business. You need business license, you put that in there. If you need to get a laptop, brand new laptop. For example, maybe I have a graphic business. I need a laptop. Who is the vendor? Best Buy. I put in laptop / Best Buy, and I put how much it costs. It costs $2,300. Okay, bam. Notice that it calculates. What else startup do I need? Well, you know, I do need to get the actual the new internet modem speed to get things rolling. So we type in internet. We get it from here, Comcast. Okay. Once I pay this startup expense, that's just to make sure I get things rolling. All right. What else could be a startup expense? What else could be a startup expense? Printer. Good. Very good. So you put printer and you put where you're going to buy the printer from and how much it costs. This is important. Do not cut corners. I told you the story with Speedy. He came in 3rd place. And by coming in 3rd place, after the competition, a lady walks up to him and say, hey, could you share me your startup expense? What do you need to run your business? He gave her the number. It was like $10,000. She wrote him a check for $10,000 to start his business. Why? Because he was passionate about his business. So now let's go over to number 4. Number 4 is the cost of goods. This is important. So for this section, we're going to look at a bun. Everybody loves burgers, right? So to make 1 cheeseburger, I'm going to need bun, beef and cheese, labor, and packaging. You might need ketchup, all the other stuff, but let's keep it simple for now to explain this purpose. So the bun costs $4. I'm not gonna go to Publix and Walmart or to buy the bun. No, I'm gonna go directly to a wholesale dealer so I can get the best price. So the bun costs $4, which is the cost of goods for the price, and then the amount that comes in the bun, so it's $4, I get 40 buns in one pack. No, 30 buns. So then the 30, I put in 30, whatever it is, okay? Now, right here, the cost per unit for one bun is 13 cents. So what I did, I was able to calculate it for you by putting those numbers, and it gives you the cost. Because a lot of kids make this mistake. They say, oh, Mr. Paris, the bun costs $4, so I need to charge $4 for my selling price, add it into the selling price. No, that's where you go wrong. You always got to do this formula, and the formula is selling price divided by the amount in the package. Quantity, time, those are the factors you have to divide it by. Now, let's scroll across. Beef. Well, I'm going over to the farmers, ranchers, and I'm getting my beef that's organic beef that's coming straight from Joaquim's family farm overseas. Okay, I get a pack, $20 for the beef. I get 100 beef in one pack. Because I'm buying wholesale, I'm buying bulk. I'm not buying just one pack. All right, now look at this. $20 divided into 100 gives you 20 cents per patty. Okay? Cheese is a big factor. Okay? So now, same concept. I go to the wholesaler, purchase some cheese, $25, I get 500 slices of cheese. Okay? I divide the both of those, I get 5 cents. Labor becomes an issue. Okay, well, labor is $8.34. Okay, but I factor labor like this. How many burgers can this person make in 1 hour? Well, they can make 50 burgers in 1 hour. I times that 2, that gives me 17 cents. That's calculated in every burger that's sold to give me my labor cost. Then we look at packaging. You gotta wrap the burger in something, right? So I go over to Costco. They had a pretty good deal for $5. I get 1,000. I got 1,000. Let's see. It's $5. It says 75. We can keep it reasonable. 75 packages. So 5 divided 75, 7 cents. Okay? So I'm going to pause there. Now look at the bottom. The COGS price, $62. Okay? Selling price per unit, you're looking at 62 cents per unit. You guys understand this part? So 62 cents, that's the actual COGS for this piece, including everything we just talked about. So now let's factor in the markup. How are you going to make money on this? So I'm going to say the rule of thumb, I'm going to mark this up 2. So 13 times 2, 16%, 16 cents. 20 cents times 2, 40 cents, and so on. That gives me a selling price of, this is going to be 14 cents. Okay, so now this gives me a markup cost of $1.14. Okay, now you look at the bottom. Cost me $1.14. Estimated sale count. Let's say we sell each one. Let's say I'm just giving a quick little 5. Let's say we sell 5, everything that you have here. Let's say 5 across the board. 5 units. Anything here? Yep, 5 burgers. We sell 5 burgers. Perfect. So right now, by me selling 5 of these burgers, okay, I make a profit of $5.70. Okay, that's just basic. That's just giving you an estimate. So now the cost of goods is $1.14. So in this form, you have these sections that you would fill out. So you can go across, you can click on it, you can come in here, you can type your information and answer the question, and then it actually puts it back in here. So each one relates to each section. So let's scroll down. Income statement. The income statement is like your report card for your business. If you're trying to go to college and you're trying to be accepted into the college, you have to submit your transcript. Well, if you're trying to get a loan, business, they're going to ask for your income statement and balance sheets. So what I did here to make your life easy, I add some internal links. So if you click on that, you can get a little more in-depth information about those things. So now let's come over here. This page is very important. This is the economics of 1 unit for 1 burger. Now, how much are we selling the burger for? You go back up here. How much here was going for? Who could help me out? $1.14. Now, what's the rule of business? We're gonna find out who is selling burgers. Well, this guy sells his burger for $2, but he's not making good money. So I'm gonna times 14 times 2, or times it twice, and I'm gonna sell my burger for $3.99. So right here, we already calculated this information. Okay, that information is coming from where? What we said? Variable fixed. Okay. So cost of variable materials, right here, packaging, you look at 7 cents because that's variable. Okay. You put all that information, it was $1 and let's just go in at $1.17. 14 cents was the selling price. Okay. I'm going to make this 0 for now because it's already included in the variable. We already did that up here. Because we know that the variable, everything is included in that cost of goods price right here. So now, if I sell it at $3.99, this is my contribution margin of $2.85. So I make a profit of $2.85 once I subtract the COGS. And you can always modify this based on what you had up here, based on what you had here. So this information can change, which goes here. All right. Now you got that information. The next phase is the fixed expenses and the break-even unit. This is important. Fixed expenses. I just go right back up here, and here it is. That number was 80. I come down. I put the 80 right here. Okay. Now to do the break expenses, this is important. You have to go onto this side, and you would type in the fixed cost, which is 80, and how much is the contribution margin? $2.85. So I'm going to type in $2.85. Notice the break-even unit. I have to sell 28 burgers to break even. Okay, and remember, this is a monthly to break even in a month, because the fixed, remember, take a look up here, this is your monthly operating fixed expense, $80 a month. Now, are you just gonna sell the exact 28 burgers? No, you gotta sell more than that. So you can have a plan to maybe certain months you might have a special, you might have burger month coming, I don't know, but you can strategize to get more money coming in. So once you have 28, you just go ahead and put the number right here, okay? And you're good to go. Remember, down here is where you fill out the information about your monthly fixed expense. So now the last piece is the yearly income statement, and this is where you put the magic together. Now let's take a look. All you're doing is going back and pulling information from here and different plugs. So I will go, my selling price is what? $3.99. I type $3.99. Okay, the total number of units that I'm going to sell within a year. Okay, within the year. What's that? You got it. So not by 1 month. If I sell 14 in 1 year, I sell 1,400 burgers in 1 year. I times 14 times 12, which gives you and it calculates right here. So this formula automatically does it for you. So it helps you out, makes your life easy. So I'm gonna make it 16 burgers. See how the number changes? Okay. Now, variable expense. If you look in green, the green tells you the formula. A times B. A times B gives you this. Let's look at variable expense per unit. It was what? Let's go per unit. Variable expense was 50 cents. You come back, you add 50 cents. 50, if I even add 60 cents, it changes. That's the variable expense per unit. And what happens here? It deducts. So it times it, and also for this piece, C minus D. C minus D gives you the money right here. And contribution margin. So this is your profit so far. Okay? But there's something else you gotta factor in. Monthly fixed expenses, which was $80. So 80 times what? This is a yearly spend. 80 times what? 12 will give you this amount. You subtract that from your contribution margin. Now you have pre-tax balance of $4,464. Now, right here it tells you E minus F. E minus F gives you this amount. So now the most important piece is the taxes. You don't want to get in any trouble with the taxes. So in the taxes, you got to pay 15% on that money that you made. Any profit that comes in, 15%. So here's a formula. G times 15% gives you this number here. Okay, $669.60. So by the end of the day, you walk away, if you did this formula, G minus H, leaves you with a contribution margin of $3,794.40. This is what you walk away at the end of the year. You still make your money, you still make all that money back, but you make a profit of that. Okay? Kind of like half, almost. So this form is going to help you out in completing your information. And once it's done, you go back here, you update your information on your lean canvas, and then if I go down, pitch deck, you click on this, and this is where you come back, same information that you did all the hard work for, right here, you just fill it in. Okay, scroll down, look for the yearly projection, and you fill it in. Total units sold, gross profit, net, all that's right here. Okay? Beautiful. Alright, so what I'm going to do is stop. It's sharing.